Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. It's been a little while, been a little while. I've been busy. I've been busy with life, but I'm still coming to you all with some content today. And today we're going to talk about gold and Bitcoin hitting all-time highs and my prediction of just like what's going to happen next. And then also crypto and gold mining stocks. These are some stocks that have been plummeting amidst the actual assets, the underlying assets doing well. So that's what we're going to look at today. So I'm gonna go ahead and kick the intro, and we'll be back here in a minute. See you shortly.
Think, act, and prosper. You are now tuned into the Money Level Show.
All right. We are back. So today we're going to talk about the sell-off. I mean, there was a Bitcoin hit all-time highs and then sold off. Gold hit all-time highs and it's still pretty elevated, so it didn't sell off like Bitcoin did. I've been talking to you all on the channel for a while. I've been talking about me positioning myself in crypto and Bitcoin, mostly Bitcoin as a store of value and crypto as an actual speculation. I've talked to you all about that. I've been transparent about that. I've shown you some of the cryptos that I've been in. The markets have been moving significantly. So I have seen my portfolios actually outdo my regular stock portfolio too. So that's been I've been expecting that because that happened before. So I think we're still early. I just think that we haven't seen anything yet. Even my wife, she's been getting into some investing in crypto and everything. She gets super excited. Yeah, it's going up. And I'm just like, yeah, this ain't nothing compared to what I think we're going to see in this market. And I will tell you why. So we're going to go ahead and jump over to this article. This just talks about the inflows into these Bitcoin ETFs. So when the Bitcoin ETFs were launched, many people had a lot of concerns, obviously, and rightfully so. Bitcoin was meant to be a peer-to-peer asset and decentralized, but now you have large institutions that are buying Bitcoin hand over fist, and you have people that were not originally investing in Bitcoin, like they didn't want to buy the Bitcoin themselves, or they didn't want to learn how to use a hardware wallet, how to store it, how to open a Coinbase account, whatever the case may be. They just want their financial advisor to take care of this for them. So this opened up an opportunity for just many people out there that were intimidated about the asset and things of that nature. And it also brought some stability to Bitcoin itself, because now you have huge institutions that are drawing in capital, that are raising money, and they're buying and they're going into these Bitcoin ETFs. And so we're going to look at this, and we're going to actually look at some of the Bitcoin ETFs and which ones I actually hold. All right. So this is just an article. We're not going to read the whole thing, but Bitcoin ETFs see record 2.4 billion weekly inflow. So this is just on the week. It's raised a lot more than that since they launched in I think it was mid-January. BlackRock's IBIT leads CoinShares. Okay, so inflows accelerated last week, indicating an increase in demand for the new spot-based ETFs. CoinShares head of research James Butterfield said. So overall, a record of 2.5 billion flowed into the ETFs this last week, with Bitcoin funds being responsible for 99% of the inflows. Outflows from Grayscale's GBTC were compensated by massive allocation to BlackRock's IBIT and Fidelity's FBTC. So I actually own IBIT and I own Fidelity's FBTC, which I will show you. I'll show you why I own them as well, but I do own those, just FYI. So demand for Bitcoin ETFs accelerated. They raked in a record for the last week of the 2.45 billion that flowed into the digital asset. Allocations to the newly approved U.S. spot Bitcoin ETFs overwhelmed the 623 million outflows from Grayscale Bitcoin Trust. So you have IBIT and FBTC. They attracted 1.6 billion and 648 million over the past week, respectively. So these are some huge numbers of people throwing cash into these ETFs so that they can have exposure to Bitcoin. Now, this has changed the game. This has changed the game significantly. I mean, it used to just be like retail coming in. I mean, then this last crypto cycle, you had a lot more institutional buy-in. I mean, just think about the massive amount of promotion it was getting. It was a lot of FOMO. You had Super Bowl commercials. You had LeBron James doing commercials. Like, it was just a massive amount of people running into the space. And then we had a huge sell-off. People thought it was dead, but institutions were applying to the SEC to get an ETF approved. So you had BlackRock, which was the biggest institution. Then you had Fidelity. You had the ARK ETF that is ran by Cathie Wood. You had many others that applied for these ETFs and they got approved. So this just opened the door, the floodgates to many other pretty much many other people to get invested in Bitcoin. So as you can see, these are the flows by asset. Bitcoin, they had 2.4 billion on the week. The month to date inflows, they had 3.6 and then 5 billion year to date. And I think this is just the, let me see. I know the number's higher than this in terms of total inflows for the year. So yeah, I'm trying to find a total number, but it's not showing it on here. So anyways, we see that institutions are coming in buying. So we're going to jump over here to some charts because I think it'll be important for you all to see this. So we have Fidelity's Bitcoin fund. I started buying Fidelity because Fidelity have been mining and storing their own Bitcoin for a long time. They've been doing it for years. And then so now they have a Bitcoin ETF. So most of the other big institutions are storing their Bitcoin with Coinbase, while Fidelity is custodying its own Bitcoin. So obviously when you have someone storing their Bitcoin at Coinbase, it gives another layer of counterparty risk. Say Coinbase goes down, say somebody hacks Coinbase or whatever, unlikely. But let's see, the cap showed up. What's up, DT? It's 2 a.m. where I'm at. Hey, so you're on the East Coast. Where you live at, man? Where you at on the East Coast, man? Good to see you. Good to see you. Thank you for chiming in. So Fidelity holds its own Bitcoin. So that means that there's less counterparty risk. That means that if something happens with Coinbase, the other Bitcoin ETFs would be impacted versus Fidelity, who owns its own Bitcoin, would have less ramifications for that. That's one reason why I hold Fidelity. North Carolina, I see you, man. That's the Tar Heels. So here's Fidelity's ETF. So when you look at, let's see, I'm gonna look at the 3-month. So when these ETFs were launched, they got plummeted. They got plummeted pretty bad. So this is when they launched, and Fidelity went down to about $33. I was buying Fidelity at $33. I was like, okay, let me go ahead and get in on this asset. So I was buying it this low. It ended up going up to $60. So it was about $60. It touched it today. And so that was a nice gain for me. But I ultimately think that with the amount of money flowing into this sector, I think that these Bitcoin ETFs can be in the hundreds of dollars in the next few years. It just has some big, huge capital and some big powerful players behind it. So it's hard to see them not do well in the future. And I think they're going to be worth hundreds of dollars later on. So I am still averaging in here and there. I may buy a little bit tomorrow since we had this sell off here. That is obviously related to Bitcoin itself. So if we go and look at the Bitcoin charts itself, where's it at? Here we go. Bitcoin reached this all-time high. We saw that today or yesterday, depending on where you live. Bitcoin rose above its previous all-time high. It had a huge sell-off. This is where you see this candlestick come down here. It dropped to about 59,000. It was a flash crash, and then now it ended up closing at 63,000, and now it's back up to 65,000. So Bitcoin is back to its all-time highs. I remember I was telling you all about this. I was buying back in when Bitcoin was 14K, and then I sold it. I actually sold a lot of my Bitcoin when it hit 23,000. I was like, okay, it's going to go back down. It's going to go back down. I was super bearish at that point. And then I saw it wasn't going back down. So I started buying back in at 25, 27, 30,000. And it's just been on a tear ever since. I mean, you look at it. I mean, it hit 39,000, and let's look at the yearly chart. I mean, yeah. So it was at 20,000. I sold some around here when it popped up, and then it just consolidated for a while. And then it popped up again. I just kept, averaging back in. And then you see ever since October, it's just been on a tear, and it hit the all-time high again. So I've been letting you all know about this. And so when I say think, act, and prosper, this is the opportunity for you to be able to earn some money for yourself and to be able to, obviously, if you don't trust the asset, you don't trust the asset. Me, I trust the asset, and I've done my research on it. So that's what I think about it. So Bitcoin hit the all-time high today, and I think it's going to go a lot higher. We haven't even had the Bitcoin halving yet, and we also haven't had the Fed cut rates yet. So those are two things that I think is going to be bullish for the asset. So I'm going to look this up real quick. Okay, so this is the IBIT. This is the BlackRock ETF. It sold off back down to $35. And it reached 39 just recently. I believe it's 39. Yeah, it was up here about 39 bucks. That was the high. And now I sold back down to 35. This obviously needed a cool off. Everything doesn't just go straight up in the line. It doesn't go straight up in the line, and it does have to come back, and you have to have corrections. You have to have healthy corrections in a bull market. You can't expect it to just go straight up without no pullbacks at all. So I was aware that there were going to be pullbacks. I just didn't have any conviction. I didn't think that it was going to pull back to like the levels where I bought them at, right? I knew that they were going to sell off, but they weren't going to sell off a significant amount to where the price where I got them at. So something just to keep in mind. I'm actually probably going to buy some more BlackRock ETF, to be honest. It is pretty cheap compared to where I got in. I got in BlackRock at about 29 bucks. Its low was about 22. It's at 35 now versus Fidelity. I got in at 33. My average is about 38, and Fidelity hit 60, and now it's back down to 55. So I feel like I may end up buying some more IBITs. So now there's another article I want to jump to. Well, first let's go here. So the Bitcoin halving countdown, 42 days. This means that the amount of Bitcoin that is mined on a daily basis gets cut in half. And this keeps happening every 4 years, cut in half until there's no more Bitcoin to be mined and Bitcoin reaches 21 million total. So this reduces the supply. It has ultimate scarcity. So many people are seeing this as a store of value. So that's how many days until the halving cycle, and every time we have a halving cycle, there's a bull market that follows. We're already in a bull market, and Bitcoin has already hit its all-time highs before we even hit the halving cycle. So just imagine the magnitude of this next bull market, right? Imagine the magnitude of that. You even have some people coming out. I mean, some experts coming out saying that we could see Bitcoin hit 300,000 this cycle. So right now it's at 60,000. We could see this go a lot higher. So that's just something that we want to be aware of. All right. So I'm just going to jump over to this article before we jump into gold, because this is like something I was talking to my cousin about recently. Bitcoin soared to a all-time high. So why aren't the miners blasting off too? Which this is my first time reading this article. I was talking to my cousin about it because we have been investing in Riot, and Riot has just been doing terrible, performing terrible. Let's just look at Riot Platforms now. It's a Bitcoin mining company, and it's just been performing terrible, right? So we had let's go to I think we're on the yearly. Okay, here we go, the yearly. So Riot last year hit over $20, came back down. In this current bull run, it rose up to $17, came back down significantly, down to $10, popped up again to about 18, 19 bucks. And then now it's back down to 12 bucks, and it's just not staying elevated. These mining stocks are just not doing well at all. Same thing. I mean, you can see here, Riot rose close to 80 bucks a share in the last bull run when Bitcoin hit its all-time high. Around that, a little bit before it hit its all-time high, Riot rose up to 80 bucks a share, and it's still struggling to get off the ground. So same thing with other stocks like Mara. Mara's another one. Mara's trading at 22 bucks. It's been up and down, and they have been unreliable. It reminds me of the gold stocks, to be honest. We see Mara, like this last cycle, it hit $83 a share, and now it's just struggling to get up there. Bitcoin's at its all-time highs, and these miners are not moving with the asset, the underlying asset. So that's why I think it's important that we look at this article. All right. So one explanation: investors are pouring more money into spot ETFs while avoiding miners due to risks related to the Bitcoin halving. This is exactly what I shared with my cousin, except I didn't mention the Bitcoin halving. That's a new point that I'm just taking in as I'm reading this for the first time. But I was telling him, like, how come the Bitcoin ETFs are performing a lot better? You know, because I told him, like, Fidelity Bitcoin ETF, like, it's like just super strong. Like, it's not going down. It continues to go up. Like right now it's in a correction, but it's performing way better than Riot. And I told him, I said, people were flowing more money last cycle. People put more money into the miners. I mean, that was probably the safest way to play it in a way. I mean, because, you know, you're not buying the Bitcoin itself. You know, you can buy it on the stock exchange or the NASDAQ or whatever, right? And so I think that people were putting more money into that arena. But now you have a safer play, which is the ETFs. So, but let's see what the article says. Investors are long Bitcoin and short miners. It is safer to put money into Bitcoin spot ETFs rather than taking on risks that may arise from holding miners ahead of upcoming Bitcoin halving. Miners need to prove they can generate strong returns to persuade investors to rotate back into their stocks. Historical patterns suggest mining stocks may rally after the halving, while transaction fees, M&A, and other strategies might help them stay profitable. The crypto community is abuzz about Bitcoin reaching an all-time high on Tuesday, but the share prices of the miners who play a vital role in the Bitcoin ecosystem have failed to replicate the dizzying rally, as investors wary of upcoming risks from the so-called halving are instead pouring money into spot Bitcoin ETFs. So historically, Bitcoin miners were seen as a proxy for Bitcoin's price, but with higher returns when Bitcoin rallied, investors worldwide who couldn't buy Bitcoin from exchanges due to restrictions could buy mining stocks to gain exposure that helped fuel the giant rally during the last bull cycle of 21. That's exactly what I just explained. I'm glad that they're confirming that. Surprisingly, these stocks slumped significantly during the subsequent bear market, and some high profile miners filed from bankruptcy too. As the industry emerged from the brutal crypto winter and miners cleaned up their issues, there were hopes that their share of prices would recover amid a Bitcoin rally, but something else happened. Bitcoin's price is up about 54% this year and just hit an all-time high above 69,000. While the Valkyrie Bitcoin Miner ETF, a fund that tracks the performance of publicly traded miners, fell about 21%. The disconnect between Bitcoin and mining stocks gave investors a somber reminder that this bull run is different. So, by the way, these links are in the description below. So, if you want to check them out yourself, you sure can. Or you could just listen while I read, listen to an audio book, right? The main driver of the Bitcoin rally in Bitcoin this time, was the SEC's approving the spot Bitcoin ETFs and such. I mean, a lot of this is repetitive and redundant. But yeah, you can see that there's some uncertainty around the miners because of the halving coming up and the reduced amount of supply. And right now, people have a safer play by putting it into the actual ETFs as opposed to the mining stocks. So that's one of the reasons why it is not doing well. All right, so we're going to jump over to, we're actually going to look at, let's see. All right, we're going to look at some cryptos really quick before jumping into gold and gold stocks. All right. Okay, here we go. All right, so we can see the fear greed index, it hit extreme greed, and we had a huge sell-off. So obviously, you got to be careful in these markets, especially when it hits a lot of greed. We had some of these meme tokens go take off. I mean, shoot. I was buying Shiba Inu a little while ago. It was at about 900th of whatever, 900 millionth, whatever that number is, right? I haven't done math and like high school math in a long time, or college math in a long time, but it rose significantly. I mean, it actually went up about over 150% earlier this week, and obviously sold off, and then now it's still elevated way above the highs that it was before. So you have these meme tokens that have no utility, that started rising again. I did speculate in the meme tokens. I mean, you had Dogecoin, you had Pepe coin. Those coins were just taking off significantly. Some of the other coins that I've been buying myself, I mean, I've had Avalanche for a while, Polkadot. I got Chainlink. I got a few of these here, but some of them, like, they have been rising, but I haven't seen them perform like how they performed before. So, which we're still early in the bull market cycle. I think that more money will rotate into the altcoins. At some point, we're going to see extreme prices, but I am up on my investments. I'll say that for sure. Like Ethereum Classic, I was buying at about $20. It's at 35 now. ICP, I bought at $2. It's at 15 now. Filecoin, I've been buying at $3. It's at $9 now. Popped up to 10. So, a few of these, I'm still up significantly on my investment, but right now we're just in a cool off period. So, and I expect this to last. I don't know, it may last the whole week, but right now it looks like people are buying up the dip because Bitcoin is back to 66,000. It flash crashed to 61,000. Now it's back to 66,000. It's only 3,000 away from the all-time high again. So that's pretty interesting. So now we're going to go ahead and jump over to gold. Gold. Hey, what up, Cito? Good to see you, fam. Good to see you, man. Happy to be back. Levels gang. That would be a dope apparel design. That would be a dope apparel design. Yes, indeed. I may have to use that, man, and give you credit for it. My guy Tyler, I'm telling you, man, our cash will soon be gone, and it will be digital currency. The SEC and all of them know. Yes, yes. I mean, well, Congress already passed bills to issue central bank digital currencies and all of that. We track that here as well, and yeah. So it's definitely coming down the line. In the meantime, I'm going to build as much wealth as I can to have as much freedom as I can. So thank you for sharing, Tyler. Levels gang. So my levels gang is in here. That's the new term. That's the new term. Appreciate y'all. All right, so we're back. We're back. So here we go. Financial Times, gold price surges to a record high. So in hopes of interest rate cuts and a phenomenal buying by Chinese investors helped drive the rally. The price of gold has surged to a record high, driven by growing expectations of U.S. interest rate cuts, investors hunting for safe havens, and months of product. I ain't even gonna try to say it. I'm gonna have to look this word up and add it to my arsenal later. Prodigious buying. All right. This is how I improve my vocabulary, y'all. I may find a word. I'm like, what does this word mean? I haven't seen it. So this word means remarkably or impressive, great in extent. I'm adding that to the arsenal so I can sound smarter. Yes, sir. The yellow metal struck 21.41 per troy ounce on Tuesday, beating the previous record of 21.35. So gold beat its previous all-time high by $6. Right. So this has been happening multiple times. We've seen the tops with gold. We've seen a triple, quadruple top. It's still been elevated above $2,000 for the last few months. So we can see that when interest rates get cut, Fed starts to print or whatever, gold is going to rally even stronger. It is going to rally stronger. Tuesday's move represents a continuation of a rally triggered on Friday by growing hopes of a Federal Reserve rate cut in June following weaker economic data. Gold, an asset with no yield, benefits from lower borrowing costs as investors feel they have not missed out much by not putting their cash into bonds. Gold has been on a searing 16-month rally, surging 30% from just above 1,600 per troy ounce in late 2022, primarily by record buying by central bank emerging markets after the U.S. weaponized the dollar in its sanctions against Russia for its full invasion of Ukraine. We've talked about that, the weaponization of the dollar. There's been many central banks, Russia, China, many others, they're buying gold. And this is my thing. This is why I own gold. Gold is my insurance for my money. But central banks are buying gold. They're not buying Bitcoin. I mean, you may have some here and there. I don't know if El Salvador is or whatnot, but they're buying gold. So this is an important reason to own gold because you got the biggest of the institutions buying this asset as a neutral asset because we did weaponize the dollar when we took Russia off SWIFT and everything. So, so as you can see, it's been rallying. It's hit its all-time high. These are the tops I was talking about. So you hit a quadruple top. I mean, you had 1, 2, 3, 4. It came down. Now it's back up. Hopefully it breaks to the upside. It's been hammering on this top for a while, and it just hasn't broken through. So hopefully this is a breakthrough, and we see gold gets repriced to where it's supposed to be. I mean, if you look at the inflation-adjusted price of gold per troy ounce that it reached in 1980, it should be $3,000, over $3,000, which let's read more of the article. In recent months, the precious metals had gained, metal had gained second wind from what analysts describe as phenomenal purchases by Chinese customers seeking a safe place to park their cash after local property and stock markets tumble. Yet the Chinese stocks have been getting killed. I've actually been buying some. I've been buying some Alibaba as well as the ETF. And so I think that China's going to recover at some point, and those stocks are going to recover significantly, and they're very, very cheap. It's a stealth rally, said Ross Norman, chief of Metals Daily. The Western investor is not behind it. Gold continues to flow to the east. All right. Analysts say gold's record high is all the more striking given the surge in interest rates in recent years, with the Fed's benchmark at a 22-year high of between 5.25% and 5.5%, dimming the allure of gold. So gold's been performing well in this higher interest rate environment. So you can only imagine what's going to do when they cut rates. It's going to go ballistic, right? I mean, we saw this in March of 2020. Fed cut rates, started printing, gold hit its all-time high then. So you can see that on the chart here. 2020 here, Fed cuts rates, gold goes to the all-time high, right? So I know that it's going to do that. Here's another point. Despite hitting nominal all-time highs, gold is still way off from its inflation-adjusted all-time high of $33.55 per troy ounce, reached in 1980. So this is inflation-driven, right, or inflation-adjusted. So if we take out inflation, gold should be at 3,300, but right now, even though it's at a nominal high, it hasn't reached its all-time high under inflation-adjusted terms. So, yeah, I'm excited. I'm excited. Own both assets, Bitcoin, crypto, and gold. I own some of the gold miners as well. I started buying them. Yes, the physical metal. Yes, Acito, you're correct. The physical metal has performed wonderfully. The miners have been getting killed. we saw a rally back, which we're going to look at a few of them. I only own two gold companies right now. So I own Franco-Nevada. This is a royalty and streaming company, the biggest gold and silver royalty and streaming company. I've been talking about them for a while. If you watch my interview with Lobo Tigre, I did mention them. And as you can see, Franco-Nevada has went over $160 multiple times. And the recent sell-off, when they had issues in Panama, it sold off. I remember I was at the New Orleans Investment Conference here in, what was it? It was November. This big, huge candle here. I was at the New Orleans Investment Conference late November. This week was a huge sell-off. So Franco-Nevada hit like 116, 117, somewhere around there. Yeah, 118. So I bought a little bit and then it popped. I sold it and then it dropped even more. It went down to about 103 or 102, actually 102.29. So that was the lowest. And I've been buying down here and then it recently just popped to 112. But we'll see if this rally lasts. So yeah. And then I've also been buying Newmont Mining, one of the big gold miners. It's at $33. So I've been buying and selling Newmont off and on. And you see Bitcoin. BlackRock has their Bitcoin ETF up there. So Newmont's at $33. It hit $80 back. I think this was around Russia, Ukraine. Yeah, around that time, Russia, Ukraine. It just skyrocketed to over $80 at 86.37. And it's just been selling off ever since. It's just been plummeting. I've bought in and out of this stock multiple times. I've sold it, bought out, just because my conviction on the gold miners has been slacking like a lot. I have not had a strong conviction on them. Recently, Newmont sold off significantly. I bought them at 34. I was like, this is cheap. They go up to 40. Let me get out of here. Sold them, and Newmont hit $29. When I saw that, I started buying back in. Now it's rising again. So I only bought like 10 shares or something like that, but now it's rising back in again, and it's at $33. We'll see. I mean, it may go lower, it may not, but this is why I compare this to like some of the some of the, not the altcoins, but the Bitcoin mining stocks. Like the mining stocks of Bitcoin they're not running, they're getting plummeted. Same thing, they're getting pummeled. Same thing with the gold mining stocks. The underlying asset is rising, it's at an all-time highs. Bitcoin hit all-time highs. Mining stocks pummeled. Same thing with gold mining stocks pummeled, while gold itself, the physical metal, has reached all-time highs. So will they bounce back? I think they will at some point. I do think that people will come into the space, but I can't say that I have a whole lot of conviction, or that I would throw a whole lot of money in the miners at this point, until I see like a solid uptrend. I mean, I just need to see a solid, consistent uptrend. I mean, if I were to pick a technical that I would like to see, I mean, maybe here at $48, I could be like, okay, yeah, it's doing good. And maybe it's going to keep going. But yeah, the miners are just not doing well. Not doing well. Well, all right, you all, I got to get going. I hope that you all are doing well. I am going to be going live more. I'm going to be doing more videos. You all, I haven't quit the channel or anything like that. Just been going through a lot of life stuff that has been consuming a lot of my time, starting a new job, things of that nature. But I will definitely be back to to just enjoy you all. So thank you for joining into the show. Thank you for your support on the show. And I'm looking forward to dropping some more content so that we can continue to put ourselves in position to prosper. So with that being said, y'all have a blessed night. Appreciate you, the Cap Levels gang. All right. See y'all soon. Peace.